All right, what's up, everyone? Welcome back to the fourth episode of the Full Port Podcast. You have Nick and I as Santa's little helpers, right? Something like that.
Yeah, we're working on this Christmas day.
Nick, you actually quite look like you're in the sky.
Oh, wait, yeah, I guess so. Yeah, bro, I'm coming through. If you guys wanna drop some cookies by our chimneys, that'd be chill.
Yeah. If you guys might have noticed, I've upgraded my setup. Unfortunately, I've not upgraded the location. I'm still in my mother's guest bedroom. But shout out to my friends Ricardo, who was like, yo, your video's ass. Can you please fix it and fix your mic also? So, you know, I don't got the scenery, but I got the equipment now, gearhead. So cool. So Nick had a really good idea. For this year, he basically wanted, or this episode, he wanted to do a top three trades of the year and top worst trades of the year. And so, Nick, why don't you kick it off? Where do you want to start first?
Yeah, okay, so I guess, I consider it just, anywhere where I've, deployed money that has some gambling, aspect to it. So, we'll talk about the top 3 losing trades. We'll go in reverse order, 3, 2, 1, and then, yeah, that's how we'll do it. I'll do my 3rd, and then you do your 3rd, and then that's how we'll do it. So, alright, number 3 is playing poker cash games. So, this year, I am booking a negative year in poker P&L. Um, it was a fun ride. It was pretty fun playing poker, I'd say, so it's not a big regret. Uh, I started to play bigger stakes, which results in bigger swings, and learn a bit more about how to play the game better, and I think I will continue playing. And I will probably try to play at higher stakes because it gets very competitive and it scratches that itch for me, so,
So,
um
I guess how did you get into poker? And give me like a little bit of an idea of, I don't want you to tell me a number of how high stakes you play, but like, are we talking like 1, 2, or are we talking a little higher than that?
we're talking a little higher than that, yeah. Yeah, I got into it actually in high school. So there was this website called Playhem, and they
Mhm.
offered free poker tournaments. And I was like in 10th or 11th grade playing online poker tournaments. And I actually came in third place on one of the first few tournaments I played, which is like pure beginner's luck. I had no idea what I was doing, but banked it, right? At the time, the prize pool was so small. It was I don't know, $100. But I was in 10th grade. $100
That's a
is
lot of
like
money,
an
dude.
yeah, it's an
That's an
insane
insane
amount of
amount of
money.
money. Yeah,
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 so I
yeah.
guess I've been hooked since then, I guess. But yeah, we played small cash games, like really small, like 5 cent, 10 cent, maybe even 1 cent, 2 cent in high school.
Yeah, yeah, that's what
Um,
I did. Like 1 cent, 2 cent. Yeah, yeah, just to kind of
yeah,
play.
yeah, and then I think I always kind of wanted to try playing higher and compete with the best, because yeah, I guess that was just kind of the background I'm from. Uh, and yeah, that's kind of how I got into it, I guess. It's like the competitive, itch. Also, it's an adrenaline high activity.
Hmm.
Um, and also it's a big science in a way. There's a lot to kind of learn about the game itself, and people talk about studying solvers, studying what's the most optimal bet sizing to use in certain situations, what hands are good to play, what hands are bad to play. And then there's also the other aspect, which is the most fun, and that's kind of the human aspect. Like people commonly say poker is not a game of skill. It's or rather, people say poker is about playing the other person. And so it comes down a lot to thinking about how other people are playing at the poker table you're at, and kind of seeing, kind of predict or model how they would handle certain situations with certain hands. And then you try to play one step ahead of that.
Hmm.
And that's kind of that there's a lot more of that at the games that I've been playing rather than solver optimal play. But
Right.
yeah, so I would say
I have a
that's kind of
question.
yeah.
Do you think so? Obviously, we both have sizable portfolios in equities and crypto, and the volatility. When we look at a portfolio can swing quite a bit. Do you feel that that compels you to size up when you play poker? Like it's no longer worth it to get that itch to play 1, 2. Is that why you're playing higher stakes? Because clearly, it's not just about the love of the game. right?
I mean, I would say that, you know, I guess, like, the higher it goes, the less likely it is to be about super GTO, like, by the book play, and
Mm,
I'm trying to avoid being in spots where it's by the book play, because that's kinda where it's boring and, like, the edge is far thinner in those type of spots, and the variance is, like, yeah, I guess, lower. So, yeah, I mean, as, like, I mean, like, it's funny, like, I wouldn't say the portfolio size really kinda, like, matters here because it's relatively speaking, the P&Ls with poker is not much compared to, like, you know, like, daily swings, weekly swings, monthly swings,
mm.
like, it doesn't matter, but it's just, like, that's just the level we're competing at as far as, like, what's around me, and, like, yeah, I guess it would be cool to, like, one day be like, "Yo, I was playing poker one night, and then, like, I bought a house with the winnings." Like, that'd be kinda cool, but,
Yeah,
like, you
yeah,
know,
yeah, yeah.
cause like, people do that, I mean, like, you see on stream, like, their P&Ls do get really, really big on, like, the poker live stream, so, yeah, I mean, I don't know if I'll get there one day, but, you know, yeah, it's more so kinda, like, for the game, I'd say. It's just a fun game to play. Yeah.
Well, you didn't really answer my question, so, like,
Wait,
why not play
sorry, what
lower
was the question?
stakes? Why not play lower stakes then?
Oh.
If it's just for the
I
game,
mean, yeah,
like, you
'cause
know?
the lower stakes is a different type of game, basically. Yeah.
Okay.
It's, like, less about playing people and more about yeah. It
I mean, that
becomes
depends.
more or less it
I suppose
depends,
that
of course,
depends. That depends on the
who's playing.
person's net worth who's playing.
Oh, okay. Yeah, I guess true. But,
Yeah,
like,
yeah,
yeah,
yeah.
it also depends who else is at the table, so, yeah,
Yeah,
I don't
yeah.
know.
Hold on, my cat. Happy no. Oh, there she goes. Um. Okay. Yeah. So maybe I'll hop off and hop off to my my third worst trade of the year. Um. And can you guess what it is?
3rd worst trade.
You're in
Uh,
it, by the way.
I was in it? We did so many. We did so many that we did so many that were bad.
Okay. Okay.
Yeah, go
Okay.
ahead.
Yeah. It was Duolingo.
Oh my
Like,
god, okay. Okay, yeah.
yeah, and calling it a bad trade is not really like I wouldn't really call it a bad trade. Like if you told me to do it again, like would I do it again? I think so.
I probably
Unfortunately,
would too.
I mean I had call options on it, but relatively longer dated. Definitely had a few months, and I sized in fairly sizable. I would say like it represented maybe 5-6% of my portfolio, and going into earnings, it was already beaten down. With Martin, I started kind of picking up these like nice mean reversion plays. That's generally just how I invest and trade, is because I remember Martin Shkreli, he was trying to get people on Chegg. I don't know if you remember that.
Yes, I do remember. That was earlier this year,
Yeah,
right?
yeah, and I was kind of trying to get you into it. I made a little bit of money on it, but got out of it because, it's one of those Warren Buffett things. You know how he talks about like picking up pennies in front of or not picking up pennies in front of a steamroller, where basically like, Warren Buffett has always been like, oh, it's not about getting a deal. You need to buy high quality companies at a deal. Like when Charlie Munger joined him, he was like, don't just buy like discounted goods. Make sure you're buying high quality businesses also,
Yeah.
right? Because you want to be able to just hold it and compound, right? It just saves you a lot of time. And Chegg was absolutely that. Chegg was kind of trading. It was trading significantly below cash on hand. Obviously, quarter over quarter, everything was just declining. But I think they had like $500-600 million in cash on hand, and it was trading at 150 million, right?
Yeah.
And the reason why I bring this to Duolingo is because I generally, people didn't like Chegg because with ChatGPT, people were using Chegg just to cheat on their college exams or whatever, right? Homework, and you could
Yeah.
just ChatGPT the answer, and it would totally be fine. And like, okay, fine. I completely understand why Chegg goes to zero. That's understandable, right? But with Duolingo, for example, I thought it was systematically very different, right? It's like people were using Duolingo more similar to a game, or like, it fills up pockets of your time and it feels good. So I likened it more to like the gym membership subscription, where it's basically like, hey, like I go to the gym, on January 1st, a lot of people are going to subscribe to like Planet Fitness, Equinox, or whatever, and they're never going to go. They're never going to
Yeah.
go,
Yeah.
right? But you pay it because you feel good about it, right? And the retention is strong. Or
Yeah.
a prime example of this is like the whole meditation app thing, right? It's like, meditating is hard, right? Meditating is really hard. But people still say subscribe to these things with zero usage. Why is that? It's because they had a commitment to improve their mental focus and whatever, but they never unsubscribe because they're like, wait, no, 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 no. I still care about improving this about myself, even though they never do it. Right.
Yeah.
So with
Yeah.
Duolingo, it was a little bit like the play was like, wait, no, 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 no. I think the market significantly misunderstands this. They're saying that ChatGPT is going to kill it. But bro, like, ain't nobody going on ChatGPT and being like, teach me, come up with a language lesson for me every day and let's do this, right? It's like,
Yeah.
one, I don't know the context windows are even large enough to continue that conversation for over 365 days of learning, right? Because it needs context. At least in Gemini, you can't right now. Maybe soon. And when we went into that earnings and it was like so beaten down from all-time highs, we basically were like, bro, this is an easy 20%.
Yeah.
I had like,
Yeah.
yeah, easy 20%. We're gonna make
No,
a bag, you know?
I
And
remember that. Yeah.
lo and behold, we became community members, right?
We became community members. We got dumped on. Yeah. Yeah, I mean, dude, like if you use the app too, like I downloaded it, I bought like a subscription. Like the learning experience on there is actually kind of fun. And they're
It
really
is,
good at
yeah.
like they're really good at gamifying it. I started to kind of liken it to like I started to think about it as like a Roblox model. Well, obviously like Roblox's platforms there, but it's just like at the end of it, like you can see Duolingo as like a game, like as a gaming app because dude, the push notifications they give you to like get back in there, all the animations, like it's like it's a lot of dopamine,
Yep, yep,
like
yep.
as you're going through it.
Bro,
Um,
can I tag in here? The
yeah,
really funny thing you said about push notifications is that, like, as a guy who's been running kind of mobile apps my whole life, the funniest thing, there's two instances, is that like there's one short that my good friend Ryan made once, um, when it was near the end of the quarter, and then Snapchat just kept spamming push notifications. Like, hey,
oh,
you haven't checked in a while. Do you want to check in? Because they're trying to boost their DAU numbers before they had to report for the
oh,
quarter.
interesting,
Yeah,
interesting.
it was like so funny, and he did a short that one, and then there was another one recently that went viral on Twitter where I think it was like SoFi, or I don't know if it was SoFi or one of the money apps, but they're like, "We'll give you $1 for logging back in."
Wow. What
Literally,
the heck?
yeah.
Okay. Wow.
And then everyone's like, shit ain't going so well
Gosh.
over there." Yeah, yeah, yeah. And so, tangentially, that I thought that was interesting. Did you want to finish your thought, or should I just kind of continue on the
Yeah, I mean, I
Duolingo
guess the
train?
last thing is
Yeah.
that yeah, the last thing is that, just from like a company growth perspective, just looking at their last earnings and it's like and just or not even last earnings, just all the earnings, you're just like, wow, like this thing just keeps growing really aggressively. Um, so they're doing like something pretty right. And I think, yeah, I watched the CEO talk, I guess, like for some of their investor calls, and he seems to have like a grand vision of like Duolingo being like the education hub, and they're figuring that out, and I think they're doing well at it too. So yeah, I mean, would I make that bet again? Yes. Would like, and I do think if we were just in a different market, that bet would have paid off like really well. It's just that everything rugged during that time, so we got rugged too, pretty much. Yeah.
Yeah, 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 I agree. Yeah,
Yeah.
I think, yeah, it's so interesting. Yeah, the last thing I'll say about the Duolingo is because like when they came out and they reported user growth was up, subscriptions were not down. It was not like Chegg,
Everything was
right?
good. Yeah.
Everything was good, but what happened exactly? I think it like fell like 15-20%. But then
They said
what
that
what what they say again?
they're gonna
Oh,
focus
right.
less on monetization and more on growth and like increasing quality of like the courses. That's what they said. Yeah.
Right, 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 right. Which like freaked out Wall Street basically,
Yeah.
and they're back into build mode. So I mean, it's definitely a stock that I'm gonna keep my eye on, kind of going into 2026. It's just one of those things you just want to trade because you fundamentally know it's a really, really strong team. It's a very strong product that continues to grow. I know it's not as sexy as all the other AI narrative companies, but it's priced quite attractively. So it's definitely
Yeah.
something we should continue to keep our eyes on. And it's, by the way, only continued to plummet since
Yeah.
we got owned. Yeah, because
Yeah.
I remember there was a period Nick was like, I called Nick called me, and we were just not having a good day. We were just like, bro, like, do we really want to be bag holders? Do we really want to stick around and see this out? Because there was real opportunity cost in the market, right?
Yeah.
There was real
Yeah.
opportunity cost. And I think ultimately you made it all back on a separate trade. Well, you don't have to go into that right now, but I just took the fat L on that. So that was my third worst trade. So moving on, let's kind of move
Yeah.
over to your second. Oh wait, do we want to do third best trade, or do you do three? Let's do
Let's
third
do
best trade.
let's do all the losses. You want to do all the losses first?
Sure, sure. Yeah, let's do
Okay,
it.
let's
Yeah.
go. Okay, so yeah, second losing trade, top second losing trade. I'm gonna say oil futures. You're laughing because you're like, why the hell is Nick trading oil
I don't
futures?
know. I don't
Nick has
know.
no edge trading oil futures. You're right. I had no edge trading this thing, but I traded it
Mhm.
anyway. Why did I trade it? Because Robinhood made it so easy to do so. Right? Like the money's in the account. Like at the time, what was going on was like tensions in the Middle East were rising. And so that kind of resulted in like oil going up. And I was like, oh, okay. So I was just trading oil throughout that up wave too. So luckily I had some profit to kind of just like gamble away. And then like as the tensions were like still going, I was like, oh, fuck it. Like maybe they'll go more. And like if there was like the strait in the Middle East that if that's blocked and like oil just spikes up everywhere because that's like the main strait oil like exits through. Um so I was like, oh, if that's blocked and like this will pay a ton. Like sure, let's go. And then like I lever up and then Trump tweets that, hey, we're having a ceasefire. And then within 4 hours,
Mm.
I lose all the profit I made that month from trading oil futures and more. And yeah, oil just crashed maybe from like 75 per barrel to like 65 in the span of like 4 hours.
Mhm.
I was like,
Wow.
yo, this sucks. So yeah, there you have it. No edge gambling. That's what it'll do to you.
Yeah, I'm like pretty unfamiliar with how like I'll be completely honest with you. Maybe this speaks to my unsophisticated nature, but I just don't know how to trade futures, nor have I ever really wanted to. So watching you do that from the sideline was me just watching you and shrugging. I was like, maybe because I know you have a few friends that or business partners that do quite well in futures.
Yeah,
um,
yeah.
and I know of some like I know it's popular because there's no like minimum or something, right? And there's high
It
volatility there.
it just gives you a lot of leverage from just clicking a button. It's essentially delta leverage. It just kinda just
I
gives it
see,
to
I
you.
see.
Yeah,
I see.
yeah.
Yeah, so I know it's a popular product, but maybe Perps will take over that kind of for retail moving forward.
Yeah, it's honestly, bro, don't trade them. Like,
I
there's just
won't.
no point.
I don't really want to.
For everyone listening to this pod, don't trade them. They're literally just there's no point. Like, just yeah.
Okay. I won't. I'll trade the past, bro. No futures.
Yeah.
Okay, so my second worst trade, and you watch this in slow motion of me getting pounded, was Ton X. So Ton X is basically a crypto treasury company for the token Ton. And a few reasons as to why I went into this, because you remember my framework is generally always three things. It's is the team good, is the price attractive, and how large is the TAM?
Yeah,
Um,
real quick, ton is
oh, Ton is like the cryptocurrency of Telegram, basically. It's like their Ethereum competitor, and it's Telegram exclusively. Telegram has 1 billion monthly active users, and they exclusively use Ton to secure their network. It's called the Open Network. I don't know if that matters, but yeah, kind of going back onto my my spiel here. Um, team wise, there's two founders or three founders or so in the modern era, alive that I really look up to. One, obviously Palmer Luckey. Two, Vlad Tenev. And three is Pavel Durov, right? Like I think he's just a gangster. He's a G, and we'll talk a little bit about him later about his sperm donation, and his Genghis Khan quest. But but Telegram is 100% owned by Pavel Durov, and the only way to get exposure to the Telegram ecosystem was by buying Ton. That's step one, right? So step two was that Manny Stotts, he is an emerging markets investor that I really, really respect. I invest quite a bit in emerging markets as well, like India. Shout out Grow. And when he left the Ton Foundation, because he's a big bag holder, and there's a lot going on. Well, let's not go there. There's rumors of a lot of stuff going down there. But when he left the Ton Foundation to basically head up to become the Michael Saylor or the Bill Lee, is that what his name is? Bill. Wow, not
Michael
Bill.
Saylor and Tom Lee.
Tom Lee.
Probably,
I'm thinking of
yeah.
Bill Huang. Yeah, the other
Oh.
Korean degenerate. Yeah. When Tom Lee left to be, with Bitmine, I was like, oh, like Manny is really smart. And I listened to a few of his interviews, and I was like, wow, like this might be an attractive opportunity. Tonex had, fallen 60% already at the point in which I was looking at the opportunity. It was trading below MNAV at around zero point 0.9. MNAV is basically like when you look at all the assets that they own, in comparison to basically their market cap. What is it possibly? How much is that off? Right? It's like, and you can imagine why that's attractive, right? Like, if I have, you know, $900 million, for example, or if I have $1 billion in assets and my burn is very low, nothing's really happening as a treasury company, and my company is trading at $700 million market cap, as a shareholder, you're kind of like, wow, well, this thing should easily, the math is so simple. This thing should easily be trading, much higher, right? So you
Yeah.
feel like your downside is protected, your risk adjusted downside protected, and there's quite a bit of upside because with MicroStrategy with Bitmine, they're trading quite a bit above 1 in terms of the MNAV. But we won't have to dive into that. And so I took a very large position. I would say probably 50% of my portfolio was holding um holding Tonex, and obviously not to get into numbers and stuff like that, but I was holding a good enough amount that Manny would actually responded to my DM. And I previously tried to reach out to him before just to share notes on emerging markets investing, and finally he responded to me. And from there, I think it just continued to slide. I think I bought in at 7, an average of 7, DCA down like an idiot. Because once things start sliding against you, you should really start to reconsider your thesis instead of DCAing down and getting more and more excited. I mean, it's hard to straddle that, right? Because
Mhm.
when things continue to go down, if you love the opportunity at 7, you should love it at 5, right? So continue to DCA down until it almost hit 3 or 4 or something like that. And I was getting crushed so hard, and all the other opportunities that I had were ripping. Um, I ultimately capitulated, right? And took probably a 20% loss on my entire portfolio, which was really, really painful. And because I was holding a sizable position of 10x, it was quite hard to get out of that position without extreme slippage because not many people are trading it. Um, and I think when you kind of look back, I did the right decision. I mean, the thing's trading at $2 now,
Yeah.
right? It's
Yeah,
it,
it's
it,
crazy.
it's not great. And looking back, would I have done the trade again? I would have, but I wish, again, it's all about a practice of risk management, right? Like I think that's it's people say like spotting the right opportunities is hard. I actually don't think that part is hard. It's really about like protecting yourself against yourself. Where going back, I probably would have only exposed maybe 2-3% of my portfolio, which would allow me to kind of go very long on it. But instead, I did 10x that, right? Or maybe even more actually. So, big lesson for me, kind of going into the new year. So, um, at least I could write off, the losses.
Yeah, I mean, dude,
Yeah.
that it's tricky because yeah, I remember in September, second half of September, I think you started taking this position. And yeah, I was like, I understood why because DATs, decentralized asset treasuries, were just kind of like popping off at the time. A
Digital
lot of
asset
them were
treasuries.
what?
Digital asset treasuries, because they're not
Oh,
decentralized, right? They're very
oh, duh,
centralized.
duh,
Yeah,
duh,
yeah,
yeah.
yeah, yeah, yeah.
Digital, yeah. Yeah. So, yeah, I remember during that time, those were all popping off. Tom Lee's BMNR just had like an insane run, and so like, yeah, and it's very, very standard among trading or traders to look for sympathy plays after like a really, really big play happened for a bigger name. And so that's kind of like, yeah, that's a very standard like type of like approach, and it usually works. It usually like sympathy
Well,
trades usually do work. Um,
yeah.
but
It,
yeah,
it, it
this spot was like particularly tricky because I don't know. I guess that's just have a weird financial engineering, man. It's weird. Like they acquire, they reverse merger or like raise a pipe to like take some company public or restructure it entirely, and then like yeah, I don't know. It's weird.
yeah. Like in
Yeah.
retrospect, it was like an extreme beta on crypto, and even I was very critical of all the DATs that are coming up because companies that like they're no offense to like some of these other coins, but it's like, if you have like Barachain, for example, where there's still even Story, right? When you're a new protocol and you're still developing activity, and then you're already transferring OTC your tokens to this public entity for retail to buy, it's really hard not to argue the narrative that you're just dumping on retail and passing off to someone else, right? And
Yeah.
I mean, I did quite a bit of work on, and I'm not accusing ton of that, though there could be a little bit of it, but um, I, you know, I did quite a bit of work on all the DATs, and I was looking at my downside, and I was like, the worst trading DAT is trading at 50% MNAV, right? And
Right,
I was
right,
like, and I think Ton X traded below that, so
right.
it was it was not fun. But anyway,
Yeah,
we'll wrap that up. That was kind of a big
yeah,
mistake on my end because I think I should have took a big step back instead and took a look at how crypto was doing in general, but also like, you know, MicroStrategy is trading below one also now, right? It's like it's wrong to comp to the top when most of them are trading below one.
yeah, I mean, yeah, we were all, like, in that spot of hope, like, kind of thinking crypto would revert back up. I mean, I was also doing longing crypto trades too during that time, so, yeah, it was, yeah, rugged. Fuck.
All right, well, Nick, let's kind of move on to your biggest fumble of the
Okay.
year.
Okay, so the biggest loss,
Yeah, yeah.
this should be no surprise. Uh, it's crypto perps. That is
Really?
that
That's
is
yours?
that's my P&L wise biggest loss, like, for
Mm,
sure. It's just
okay.
so stupid. There's no edge trading perps. Like, oh yeah, perps are horrible, man. Like, they the liquidation aspect of perps is horrible because if you compare that to call options, if your call option swings down minus 50%, you can at least hold them. You can at least hold on to them if you have enough time on them and like kind of like bet on a reversion. With perps, if you like swing down minus 50% and you're leveraging a way where you get liquidated, your position will get liquidated, then likely the market will bounce without you, and then like you just feel awful. You literally just feel like robbed. So yeah, there was two times I kind of like got really burned by perps. First time was in August. I was longing meme coin perps. That's like the worst thing that you could possibly do.
I
Um,
remember, yeah.
yeah, the worst thing you could possibly do. There's no liquidity in them. And knowing what I know about crypto, I also kind of knew like, huh, I could very easily just be targeted here. And that is probably true. Like the people would see my positions and be like, hey, this like really, very large position relative to others is like still here. Like people like intentionally look for like liquidations and like to hunt. So being in a meme coin, being sized up on meme coin perps is like a very big way to expose yourself to that, and that's what I did. And then the second time was Ethereum in October. I just kind of like longed it, really, really kind of like buying into Tom Lee's like Ethereum super cycle stuff. And yeah, just kind of got rugged. Longed Ethereum at like 3.9K, capitulated at like 3.6, and I was like, all right. Luckily, I didn't martingale it more because that was not it ended up trading at, like, 2.7. So I was just like, "Alright, this is ass."
Yeah,
And
I think
yeah,
the
a good
hard oh, I think the hard part about crypto also is there's no, like, circuit breaker, right? Because remember when
yeah.
everyone got liquidated, it literally yeeted itself down to, what was it, 1,200 for, like, a few seconds or, like, a few minutes? Do you remember how
Yes.
low it went?
For Ethereum, I think it went from, like, 43 to, like, 26 and then, like, bounced straight back up to, like, 38 within not too long of a time.
I see.
It was wild. Actually, sorry, it might have been 43 to, like, 36, and then it kinda bounced back up. And yeah, also this Ethereum long I took was after 1010, was after the big liquidation. So
Oh,
the
okay.
thought there was like, "Hey, like, a lot of leverage is wiped out. We could be in a good spot for a bottom." And it just kept selling off since then. So, um, yeah, I guess, like, I don't really blame the trade I took because, yeah, typically after big liquidations it is a profitable time to buy. However, we just kind of fell into a winter. And when you fall into a winter is when all the trading strategies you typically have for longing fall apart. And so that's just kind of like what happens. That's just kind of like part of the game in the sense. Would I take a trade like that again? Yeah. Like if we're in, I don't know, an entirely different spot, maybe like 6 months from now, and a big liquidation like that happens, assuming we're in an uptrend, yeah, I would probably take a trade like that again because, like, likely that's just what happens if we're especially if we've been uptrending. But
That's
yeah,
true.
that's kinda
That's
like.
true.
Oh, and another thing I will say, uh, yeah, I was talking to a few friends after I kinda lost a bunch here, and I was like, "Damn," like, it just sucks because like, the fear of liquidation is just horrible and, like, uh and just not being part of the upside for when that reversion happens is like a really big L. And a few of my friends was telling me like one of the more so my friend he has like a at some point he had a very very large fund. It's wound down now just because of like logistical reasons. Uh, their biggest trade, simply put, was Bitcoin calls. That's it.
Mm.
It was like no
Mm.
other like what they well they did identify a mispricing and volatility for Bitcoin options. And so, there was some edge to that there, but yeah, options at the time were significantly underpriced, especially during like big liquidations and the bear market as well, uh towards the end of 2023. So, yeah, it's just like perps is just a really bad instrument, man. Like it's just
Yeah.
yeah, that's all I
Yeah.
really have to say. Yeah. I
Um.
yeah, I
Yeah. Go
we
ahead.
all done it though. We all got bit by it, I feel like a
Yeah.
lot of crypto
It's just
traders.
yeah. Just paying. You're just paying the market to learn. I think it's
Yeah.
like it feels high stakes and it is high stakes, but I think you gotta try it to just know what's going on in the market. And it's this unfortunate thing where it's like this is kind of why I'm talking to you about poker. You need to lose a certain amount to be able to actually feel something and learn that lesson. You know,
Yeah.
it's like you need to feel like you're about to see a god, and right, or you're not gonna normalize it, right, or just play money.
Yeah.
Um, cool. Yeah, I mean, I'll talk about my biggest loss of the year. It's Meta, as I think you know. Um, we have a good friend Calvin. He says I get too excited too quickly, but s- I somehow have the ability to suffer pain. So, I spot the right opportunity. Like, I'm very, very bullish on Meta. After that, 50, I think it was like a 15% decline coming out of earnings because of this one-time tax payment as well as increased capex spend kind of going into 2026, and did not expect it to plummet like that. But then immediately as it started to plummet, I started to again aggressively DCA, relatively longer dated call options on like for small cap. I'll obviously hold just equities and sometimes some options, and then for Mag 7, it's just not that interesting for me to hold long. Right, I know Google's a different play, because it's gone up 100%. But with Meta, I basically got chewed out of the market. IV crushed because I thought that from a mean reversion standpoint, it would recover easily by a month and a half. I thought that the narrative would just quickly turn, but um, I didn't really take a big step back and take into account macro conditions of what was going on. I kind of just like zeroed in too much on like the stock itself, but the macro backdrop of what is going on with AI, about is it over? Everyone has one foot out the door, just really punished me and didn't allow, because you saw this, right? It was basically any announcement that was incredibly bullish, like like QE happening, usually would spike the market like 5, 6, 7%.
Of
SPY would
course.
jump 3%. But then this
Of
time it
course.
was like 0.5%, right? And
Yeah.
so Meta did indeed kind of come out with a few announcements that were pretty exciting from their AI lab. Alexander Wang kind of did talk about it, but it kept it at break even, right? It never really kind of pushed it even further up. So,
Yeah.
because Magna 7, the last 3 months have just been brutal. It's like a slow grind down, right? So,
Yeah.
I think that was a really, really tough thing. And with that said, it is by and large, I've said this in the last 3 podcasts, it continues to be, I still have incredible conviction in Meta. It continues to be my largest position. I continue to add to it. And I hope in 2026 it is going to be number one on my list. My biggest loss is going to be my biggest win, right?
Yeah, I could see that kinda happening too. Yeah, bro, that oh, man, October, November was a tough time. I mean, look, I obviously bought into Meta around the same time as you. I think, you know, the way we sized and scaled it might have been a bit different, but I was also like, wow, like we actually just got like kind of giga rugged. Like
Right.
any other type of market, or rather like this is like very short-sighted thinking, but this is the type of thing that's going to happen no matter what type of market you're in. Not too long ago, an earnings reaction like that on a phenomenal company with really good growth prospects, if they had that type of negative reaction, in a very short amount of time, it would revert. It would kind of
Right.
revert and recover. And so that's what we were betting on. And yeah, this was the time that the market just kind of rugged. Uh,
Yeah. Yep.
it happens. I mean, yeah, it is kind of like, I mean, it is part of the game that like in terms of like things just kind of like breaking and rugging and like patterns not working again. But yeah, I mean, Wo would I do that again? Yes, because, like, the payoff would be so asymmetric. Um,
Right. Exactly.
so, um,
Perhaps just not again, it's all about risk control. I sized in too big again. I
yeah,
paid the price. Like, obviously, I think, every trader goes through this and, you know, I it is my own fault always. But you've seen what I've been able to do with a small portfolio at the right opportunity, and we'll
at
talk
the
about
right
that
time,
later.
yeah.
Yeah, and I just sized in too large because I think I was trying to extend my portfolio. Like I was doing very, very, very well this year, as you know, and I was just trying to not see God per se, but I was trying to make history. And the market
Yeah,
doesn't care
bro.
about your history. The market doesn't care about your history, bro. Like the market just does what it wants. And so, one of the biggest things going into 2026 is definitely refining my um my ability to manage risk, which I think is like realistically most of what investing is about, right?
Yeah, I mean, you know, I think the ability to kind of multiply in the right environment is honestly kind of rare, and like it happens like not that often. So you know the like basically we could run it back. I'm very
Yeah,
optimistic.
yeah.
Yeah,
Yeah, me too, me too.
yeah,
I'm not too concerned. Okay.
yeah.
So
All right.
we're reaching about 37 minutes. So now we
Oh,
need to do our best wins each,
okay.
right? Best
Yeah.
3 wins each. So we'll try to move it along a little faster.
Okay.
So,
Yeah. So
Nick, starting at your third best win, let's hear it.
yeah. So okay. So yeah, third best trade. It's gonna be DeFi arbitrage.
Ah,
I make it the third because like it is a bit of a boring trade, but it is like systematically a very correct trade. It's like there's a very well defined edge. There's a lot of volume put into this type of trade, and there's a very defined risk reward. And so yeah, it's essentially just like it's equivalent to kind of picking up $20 bills, $50 bills, $100 bills as you see them drop on the blockchain. That's kind of like the very non-technical way to describe it. And you use like code and systems to kind of like execute that, and you'd be competing with people who have faster execution than you.
so you're
So
like Citadel.
dude, I'm like the garage band version of Citadel. And then Citadel saw my tiny garage and they're gonna take it away from me because then they're out playing. Um, but yeah, it's like it made me realize like, wow, yeah, there's a very like when you have edge in the market, it is very well defined and it very much makes a lot of sense with like the numbers just completely you cannot argue against the numbers at all. Like it is a very clearly defined edge. And you also kind of know who is the loser as well. Like it's like, hey, who is the counterparty that results in you having this edge? And so like, yeah, those type of trades are the best. If I only ran that type of trade, I would have a very like low volatility, like very consistent P&L curve. But
Because it's delta
you know,
neutral, basically.
yeah, yeah, delta neutral arbitrage, so I'm not exposed to assets going up or down, it's just purely, like, seeing, price dislocations and equalizing them, so, um, yeah, we did that across a few chains like Solana and a few EVM chains, and, uh, yeah, I think but yeah, it is a pretty boring trade, so that's why it's my number 3.
Okay, okay. Yeah, I'll hit my number 3. I don't know if you remember, I had the craziest play that was like it felt free. After the 10-10 crash, I was holding obviously a position in Ton X and Ton. And then actually I don't think
Oh,
I was in Ton. Yeah, you remember this.
I
It was
remember this, bro.
yeah. I I got a push notification from Robinhood and it was like ton, and we're playing around with perps at around like $2. Or with ton, like I was playing around with perps at around like $2.25 and whatever. Had a decent position in it. Relatively small to portfolio, so I did a good job there. And then all of a sudden, it was like ton is at 30 cents.
Yeah, that's insane. Yeah.
And the first emotion that went through my head, and this all happened within 2 minutes, and Owen, my coworker, was sitting right next to me. One was sheer terror. It was just terror. I was like, "Oh my god, my position is gone." Right? I was like, "I cannot believe this." I open up Robinhood, and instinctually, like the dumbass I am, I was like, "Wait a minute, 30 cents? I can hold it here." And I just continued to slam by. I just slammed it. And a lot of people online, because you know how brokerages work, and it was like a lot of people couldn't get their executions through, right? It was like
Right,
they're
right.
trying to buy Dogecoin, they're trying to buy all this stuff, and they're like, I can't get through, I can't get through. Robinhood is, whatever. It's like, shut up, dude. Maybe, maybe you should get used to slamming the buy button. I continue to slam that thing. I slammed that thing so hard until I went on leverage to slam it, by the way. I went on margin to slam
Wow.
it. And then literally, I swear to God, literally about 10 minutes later, I've 3x'd.
Yeah, dude, it's actually the most insane trade, you were dude, you found yeah, you bought it at, dude, I don't even know what would cause that, like, maybe whoever's Robinhood's market maker is just was wiped out, and now all of a sudden there was no bids being placed, and you were you were right there, you're like, "Yo, I'm bidding
I
this
was
up."
like, I was like,
Yeah, that was very crazy, I mean, dude, yeah, that's a trade of a lifetime, low key, it's like,
it was.
amidst all the crash and all the chaos, you were
Yeah.
able to find, the most insane, asymmetric, bet,
It's
yeah.
like that it's like that meme of that chick that's like, first of all, her initial reaction is like, and then like her second reaction is like, "Hmm." You know?
Uh, yeah, dude,
Yeah.
that's every trader, I feel like, dreams of, a trade like that,
Uh,
it's like, yeah, in a very short amount of time, you get a quick return, and you very quickly buy a very dislocated you buy an asset at a dislocated venue, and then, yeah, it was, quick
yeah.
profit, so, yeah, that
So,
was pretty sick.
third best trade. Oh, see, I wasn't sure if that was third best trade or top trade, because I'm talking about raw dollar volume. It was just so it was just so safe and fast, you know? And it
Yeah,
wasn't an
yeah, yeah.
option. It was holding spot, right?
Right, right.
But anyway, we'll keep this conversation moving.
Yeah.
All right. Second best trade, Nick. What you got?
Yeah, okay, so, the second best trade, I'd say, or I guess strategy, was, punting on Mag 7 calls. So so
Okay.
why do I call it punting is because there was very little kinda uh, it was very discretionary. I guess it was discretionary combined with a data set that we have that generally tells us when momentum is picking up again in the market, and you could expect momentum on a time frame as low as a few days to a few weeks, upward momentum. So whenever we got that signal, I would typically just punt on a very oversold Mag 7, and just kind of hold on to it, and or buy calls on the Mag 7 and kind of just hold on to it for a few days and just kind of flip it. This was during June to basically now. And yeah, that was literally just the market itself was just a straight line up and to the right. So this is purely a trade that can only work in that type of environment. Um, and yeah, I think at some point, my Robinhood
What was
options
what
watch
what,
list.
yeah, what was the trade? Sorry. I know it's like Mag
Oh,
7, but like, can you give me an
yeah, I
example of a
mean,
trade that you
there was
did? Yeah.
June, for example, there's Google calls, right? Also, I think Tesla calls after the Elon thing, Elon getting into a fight with Trump. And then I think in end of July, I think Amazon had their earnings. They sold off 10% or something crazy. I rotated into that. And my sell targets, by the way, were I sold too early by way too early on all these calls. So I would
It's
just kind
fine
of
though,
sell.
because it's money earned. It's money earned, right?
Yeah,
It's
yeah.
money
I mean,
earned.
so the exit wasn't well defined or anything like that. So it was just so that's why I just consider it punting. It was like, oh hey, this looks like a pretty good opportunity for a quick return.
Mhm.
And then Apple, right? I think we both talked about Apple. I remember this chat with you. We were talking on Telegram, and you're like, "Yo," like I was like, "Dude, everyone hates Apple, and it's so oversold. It hasn't moved." And you're like, "Dude, Apple sucks. They don't have an AI story. They fumbled the bag. Like they lost the plot." And I'm telling you all this while I'm typing on my MacBook, while talking on my iPhone, while wearing my Apple Watch. So fuck, I don't know, right?
Yeah, 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 yeah.
And I was like, damn, yeah. I mean, I agree. Like they lost the AI plot. That's what everybody was talking about. And like people were just generally very skeptical about where Apple competes in like the big tech AI movement. But I still just kind of like YOLO'd it on it anyway because I was like, look, it's a Mag 7. In terms of like technicals and market structure, like money just flows into this thing anyway. So yeah, that was another thing. And then like obviously, yeah, we played Meta while that Meta drew me down quite a bit, but it eventually kind of like recovered. And Nvidia. All right. Nvidia, you couldn't really go wrong with punting on that this year. So anyway, yeah, that's and I will say I punted on Microsoft calls and I didn't profit there. Um, I don't know. Microsoft was just sideways since it hit 500, so I didn't make any money there. I lost money there. So yeah, that's what happened there.
Okay. Yeah, moving on. I think for me, my second one was Eli Lilly. Um,
Oh
I
yeah.
think that yeah, I know. Going into 2025, the two biggest themes that I really wanted to get exposure to were obviously GLPs, semaglutides, basically weight loss medicine. I think like um, you know, it's just been profound the effects of what these GLPs can actually, these weight loss medicines like Ozempic, whatever, Zepbound can actually do for people. A lot of disease and health problems stem from being overweight, and I just want exposure to it. And how I got into the trade was, I have to give credit to my good friend Robert. He's got MD, PhD, one of the smartest guys I know. He he basically, when listening to the Eli Lilly earnings call, they had plummeted, I think, about 10 or 15%, because um, effectively what happened was that they had a efficacy report come out around their oral GLPs. So I don't know if people know this, but for weight loss medicine right now, you need to use an injection, and not many people like using a needle, right? Self-administering a needle is like quite scary. Like diabetics do it, but like for other people, it's like jabbing yourself is kind of scary, right? And everyone's waiting to see the efficacy of what the oral one would look like, because that would really explode the market, right? About the number of people that would do it. And this thing came out where basically it was like, oh yeah, like actually it turns out the injection is still more effective, and the stock just plummeted, right? And
Yeah.
again, like a classic mean reversion dip, my stupid ass. I was actually just like talking with my friend Robert, and I was like, what are you buying? And he's like, dude, Eli Lilly, this is called his borrowed conviction, but he was like, dude, Eli Lilly, I kind of bought it today. Like, he's like, this is so silly. He's like, if you look at the market, at the end of the day, Eli Lilly still has the number one drug, tirzepatides, way ahead of Novo Nordisk, which is significantly down. And they still have the best drug on the market. Sure, like the efficacy wasn't as good, but like that doesn't matter. Like people are still going to be on the Eli Lilly train. And the best way to think about it is it's almost similar to an NVIDIA AMD situation, where it's like, oh wow, like your slightly more convenient chip is like not as great as the Blackwell, but guess what? Like you're still the best option in town, right? And so
Mhm.
when it plummeted down, I was like, man, like this guy, this one of the smartest guys I know is telling me that this is a great opportunity, and maybe I should get in too. And as you know, I basically sized in. I think it was around. Uh, it's hard to remember the number. I think it dropped to like $650, and I held
It
onto
was
that
in
position long.
August. Yeah.
Yeah, in August, I held onto that position fairly long because it wasn't that big of a size. I had leaps basically on them, and I felt comfy kind of sitting on it. And then over the next 2-3 months, it's just, this is kind of the mean reversion plays you do want. It just trended upwards towards $800, right? And I ultimately sold. I mean, I think the gain was something along the lines of almost like 500-600%, right?
Mhm,
And
mhm.
really, really exciting. And I want to kind of wrap this up. I think in terms of biggest fumbles, this could certainly be that, because very quickly, Trump I forgot that pharma was on his mind. He basically came out and was like, "Hey, like, we're gonna make this stuff accessible to everyone. Eli Lilly, this great American company, like, we're gonna be buying this. It's gonna be great." And lo and behold, the moment it hit 800, very quickly, I think within 2 weeks, it went to 1,000. 1,000, bro.
Yeah.
A
Yeah.
thousand. If I had held on, I would be the world's greatest investor, generational.
Dude,
It would have
yeah.
been, it would have been it would have been ungodly amount. And so, I don't regret it. It's money earned, but, my boy Robert, I think he's still holding on to his position, so kudos to him. But my
Nice.
god, what an incredible company and what an incredible opportunity that was, right? And,
Yeah.
yeah, I'll tie it up there unless you have something to add.
Yeah, I know. Oh, dude. I mean, I watched it from the sidelines. Obviously, I wish I participated, but like, I didn't know anything about. I didn't know anything about GLP or the weight loss stuff there. And yeah, what I will say is that I think I so there's a really good trader in my in one of my group chats. He trades the most esoteric stuff. He's also why I traded oil futures. And he was saying that in general, health, and like healthcare and biotech all had a really crappy year while all of like normal tech was ripping towards the summer. I think he did post something about longing a healthcare ETF around the same time around the same time you bought that dip. So I think
Mm,
pretty interestingly, we were in a spot where healthcare was just like very beaten down. And like
mm.
I didn't see this. Like I wasn't really paying too much carefully attention to it. But yeah, it was like a lot of that industry, I guess, or this trend was kind of misunderstood at that time. So yeah, it was wild. Like I think that type of like return was insane. And yeah, it was a really good reversion. Yeah.
Yeah. Cool. So Nick, really excited finally getting here, 50 minutes in. What is your number one trade of 2025?
Alrighty, the number one trade, the top winner is gonna have to be Open Door. Uh, it has to be Open Door. Like, very rarely do I ever tell anybody, "Yo, I think this is it." I say that very rarely, and this was the only trade probably of this whole year that I said that, and I said that to a few friends, and, like, the way the way this trade happened, it was, like, a very kinda, like, pattern matching, like, play of what happens with meme stocks, generally speaking. We saw the social media take over essentially. We saw a Reddit post in May being like, "Hey, I'm a long Open Door because I think this has a big turnaround potential. With the macro environment completely flipping over, we're going from high rates to low rates, and that would like unlock the housing market." That's where it started. And then this guy, Eric Jackson, picks it up. He's the guy who said that while Carvana was in the dumps, he was like, "Yo, this is going to go to like Carvana's gonna have a massive turnaround story." And I think he did enough activist investing to like do work with the board. And now Carvana went from like, I don't know, it went from like massive lows, like $10 to like $500. And I think he had a
Bro, I
big
think it was
part.
like 50 cents. I think it was 50 cents.
Yeah, it was very low. And I think he had a big part in kind of like leading that turnaround. And then this Eric Jackson, he picks up Open Door. And so if like you see a guy who's done a past turnaround successfully, it's likely that he'll do it again. And we were also in the type of market where these type of like crazy stories will happen. Uh, like we had a lot of euphoric indicators kind of going off saying, "Hey, yeah, this market's kind of crazy." And then yeah, we had Eric Wu, one of the co-founders of Open Door, come out and say, "Yo, like Open Door, you got to like get your shit together." You had Keith Boy be very aggressive about like, "Hey, the current CEO is like not doing her job well." And then yeah, the whole thing happened. CEO got fired. They put in a really good CEO, and like yeah, like it was a whole social media movement. Like you could see all it kind of happen live on Twitter. And this was also around the time that I started my Substack for this this more kind of like professional slash official capital management firm that I have. It and I send that newsletter out to other people in the industry. And yeah, Open Door was like one of the first trades on there. So in real time, like I was able to kind of like say the whole thesis out, and you can see my thinking throughout all that. So yeah, it was a pretty good trade. We hit it hard. I think two friends got into it. One of them hit it way harder than me, and he held on to it way longer than me. I think he still has it. So I, I sold it early. I sold it a bit earlier, but I guess the way it happened, like the return was great, and I think this type of trade can definitely happen again. Maybe like a few times every 5 years, and you can make a ton if you kind of catch it. So yeah, that's pretty much it.
Got it. Um, yeah, no, just to kind of talk about that, I was sidelined a little bit because I watched you call that trade to me, but it's just not the type of trade I'm comfortable with. Because like I know you're much better at narrative mimetic trades than I am, and I know myself, and realistically trading for me is like, am I gonna get scared out of the position? Do I have enough conviction to hold it when it drops 50%? And with open door, it's like the regret minimization framework where basically if this thing goes down 50%, how much I'm gonna hate myself?
Yeah,
you know?
yeah,
And
dude,
I was
yeah,
like, and I was like, I think I'm gonna hate myself a lot. So I didn't join you, but I saw that thing rip so hard. Like this was a period in time. The fun thing was like Matt, he did his finance at our company. Um, we were playing Super Smash games for open shares because it was like
yeah,
$2 or
yeah, yeah.
$3, and we played it at my birthday. Remember?
I remember.
And then
Yeah.
we are like, "You owe me one open share, two open share." And when things started trending towards $8, we're like, "Wait, no, 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 no more open shares, no more
No
open
more,
shares.
no
Let's
more.
go to ton. Let's do 1 ton instead."
Yeah, I'm pretty sure I owe like half your company open door shares because I sucked at Smash. So
Oh,
yeah,
okay, so I guess moving on to um my top trade. I mean, it's probably got to be Robinhood. It's got to be
yeah, for
Robinhood.
sure.
Yeah, it's I'm like the biggest Robinhood maxi ever. I got like a signed magazine from Vlad. I go to all the events. I went to the Q3 earnings call. That was kind of my big break in trading. Started buying it at $8. Constantly trading it back and forth. So I don't want to say like, oh, I held it from 8 to 150, right? It's not that I mean, sometimes it could be that simple. I ask myself why I don't just keep it that simple a lot of times, but just continuously bought more and more shares, continuously bought calls on every single dip, and it is only paid off. I think going into this macro. No, I don't want to say macro environment, right? Because I think it's very likely we're in like an S-shaped curve right now, where it's like it's going to plateau for a little bit and then maybe kind of go up again when people realize the AI trade is still going on. But I owe so much to Robinhood, not just for giving me the platform. When I say platform, I don't mean a speaking platform. I mean like the actual app, right?
Yeah, yeah,
And just incredible leadership across the board. We've talked about it on every single podcast. So I don't want to go into it, but it's the gift that keeps on giving. I think inevitably, like all markets do, when you do see a downturn because they trade beta to SPY, you're going to see Robinhood at much more attractive prices. I'm not one to call prices. I'm not that smart, and no one ever is should call prices really. But that is, I'm going to all in again at one point, literally all in, right? When it kind
yeah.
of gets there. Yeah, yeah,
Yeah, dude, Robinhood, fantastic app. I mean, I remember. I mean, we use Robinhood. We started using Robinhood such a long time ago. I think I started using it in 2017 when I first had like some amount of money from like working in tech. I just deposited it all in there, and like we just started trading. And it was also at the center. It also just helped grow Wall Street Bets, the subreddit.
yep.
And I remember we'd be using it. We're like, wow, this app is like so addicting. Like it's fun. Like it makes trading like exciting. Um, and I remember in 2023, that's when you started going in, October 2023. I remember I was looking at it at $8 and I was like, I don't know how the market's gonna do right now. I'm gonna not really touch
Yeah,
it.
and yeah, I should probably give some more warrants as to why I bought it because I just kind of said I bought a bunch of it. Yeah, like I think people didn't like it because after the whole Wall Street Bets fiasco, it went from $60 post IPO all the way down to $8, and it traded at $8 for about 2 years. And I think when I started getting into trading, observationally, I was taking the whole Peter Lynch approach where I was like, let's just start with things that you use because things that you use, it's really hard to make a product that people want to use and like, right? And the fact that I'm always going straight to Robinhood first, is an indicator. And when you kind of go on Wall Street Bets or any of these things, everyone says they hate Robinhood, but every time they post a screenshot, it's Robinhood, right?
Yep,
Just like a
yep.
lot of cognitive dissonance going there. I think the biggest exciting thing for me was, when Robinhood, they were making a significant amount of their money from, trading volume, obviously, but when I was looking into kind of their financials, the really interesting thing is because interest rates were high, they started making money off of interest rates, right? Basically, uninvested cash. They would basically
Yeah.
make interest on it and take a little bit of money. So, and during the earnings call, Vlad was talking about how their business was a little bit like a seesaw, right? When it's low interest rates, the market's going to be better and they're going to make more money on trading volume, right? But then when the market's bad and interest rates are high, then they'll just make money off interest revenue, right? And the interesting thing for me was I remember going into Q3 earnings, I started noticing, including myself, I am a retail investor, I started noticing people just started trading a lot, right? But
Yep.
interest
Yeah.
rates had not gone down. So
Yeah.
effectively, they were just double dipping, right? They're
Yeah.
just
Right.
making
Right.
most. And it just constantly just had these smash out, like smash, just destroying in the quarters, right? And that was what got me hooked. Started following the team quite closely and all their initiatives, and their execution has just been insane since then. And it's a spectacular company. I have no doubt it's going to be $1 trillion company one day. Not today, but maybe in 10 years. And I mean, they're already hitting 100 billion. So it got there way faster than I ever thought it would. So it continues to be the company that I am most excited about, at least for the fintech space. But that's what it is. And so I kind of wanted to take that question and do a really exciting new question for you.
Okay.
Going into 2026, you can only buy one stock. What is the stock? Well, I can go first. I can go
Yeah.
first. How about that? And
Yeah.
then you can take some time. So going into 2026, the number one company, again, besides Robinhood, that I'm gonna have my eye on and that I want to build a larger position in is Google.
Oh,
Um,
okay.
yeah, I know it's really interesting because you know me as like a small cap guy that likes more volatility there. Obviously, I can get that through call options and stuff like that or options, but um, the most groundbreaking thing for me that has changed my life this year has been Gemini 3, right?
Yeah.
And um when we did that mean reversion play, when Google dropped to about $150, everyone was calling for the end of Google because ChatGPT was at 900 million monthly active users. I remember both me and you were sitting there going like, "Yo, like maybe Sundar just ain't up for it, bro." And like, but like we were like, "But they have so much data. Like they have, billions of users. They're so profitable. They have YouTube. Are you really telling me that these guys can't translate that data into an effective AI product while ChatGPT can, right?" And lo and behold, at $150, now it's $300. Um, it's clear that they got their shit together, right? Like it's clear in the short period of time they're able to turn it around, get rid of all the DEI, SJW shit, and come out with basically the best chat model on their own TPUs, completely verticalized, and they're able to come out with the best image model, Nano Banana Pro, which is very important for our business, and it's just been insane, right? And then you start thinking about who has the most data in the world. It is Google.
Yeah.
They've been mapping the physical world, Google Maps, Waymo, for the longest time. Like they literally had cars driving around in cities to give you first person view in Google Maps. They've been doing it longer than anyone else. They have the data, right? So physical AI, they're already set. They have the data, right? Digital, right? If you run, like for example, I was running a research report last night for something that I was interested in. I ran it on Grok. I ran it on Grok Heavy Research. I ran it on Google Deep Research, and ultimately, the best report by far was Google. It took longer, but I was looking at the chain of reasoning and what it was researching, and it just has access to the most amount of data, which gave me the most compelling answer. Right? I was
Yeah.
trying to build
Yeah.
something. I don't really want to talk about it, but I basically was like, okay, step by step, how do I build this thing, and like what do I need to watch out for, and everything else was like relatively surface level, right? But
Right.
Google was
Right.
like, haha, let me tell you, here's exactly how you do it. And watch out for this,
Yeah.
this. And I was like, wow, this is insane. And to me, I think it's only going to get better and better. And even Elon, right? Like we posed this question last time. It's like, even he said, he's like, oh yeah, the company to be afraid of and that I would buy is Google. He's like, I don't buy stocks. Like I just build them. But
That's
if I
right.
were
That's
to,
right.
I think it's got to be Google as a hedge, right? So
Yeah.
it's expensive, but dude, it's a behemoth. I think that over the next decade, it's gonna be the number one company. I think like it's just that's it. It's set. You
Yeah,
know?
a lot of
Yeah.
AI potential, yeah. I mean, dude,
Yeah.
they've been working on it for so long, they had they had the Google Moonshot Factory. I think it was Google X. I think they called it, or
Yeah.
uh, yeah.
And they came out with the Transformer, right? So like they're the ones that pioneered it all.
Yeah, yeah. So I think Bill Ackman also came out and said, even at this price, Google looks very attractive. And yeah, you know what's funny? Like during that time, Google was at 150. I think people were saying, yeah, instead of Google searching, I use ChatGPT almost always, right?
Mhm.
But funnily enough, for me, I still defaulted to a Google search. Like I don't think my personal Google usage has ever like reasonably like went down like the whole time. So and now I do it far more because like the quick Gemini blurb it has like for each query, it's actually pretty good. So
Exactly. Exactly.
yeah.
Yeah.
Yeah, so I'm still in there. Yeah, I guess like for me, I'm gonna answer your question with like a bit of a roundabout way. Like, okay, I will say in this current state of things, like throughout most of my 20s, what I was very bullish on is generally speaking, crypto and gambling. Like crypto itself was like a huge edge for us because we understood the discrepancy between decentralized finance and TradFi, right? And I think like I would be willing to bet almost on every year that like apps that enable more gambling and obviously crypto would do very very well, right? Robinhood, I mean, I know it's like it has a different like kind of like vision and model, but like at the end of the day, it does enable a lot of gambling like behavior, and it's done very well. Coinbase, same thing, and the cryptos have had like their huge run ups and kind of like exhaustions now. And gambling is very much adopted by the current Trump administration now. Like you have the broad acceptance of prediction markets and like CFTC approvals. Like now, Polymarket is like getting that CFTC approval. So yeah, I would say a lot of a lot of the thinking there was, hey, there will be a lot of edge in gambling. Now we're like we're kind of currently in a spot where we're like, hey, is that edge becoming fully realized by it's very much adopted by administration now. Is there any edge left? Is the question I kind of ask myself there. And to be honest, I'm not I like we'll see. We'll see. But generally speaking, I would love to be long on uh on vehicles that, profit off of gambling. Obviously Robinhood is like one of them. Like maybe it would be some type of like prediction market trading strategy, uh, or it would be on-chain strategies like 2023 and 2024.
That's
But
Nick, that's not a company, bro. That's not a company.
yeah, I know it's not a company.
Unless they can invest in you, you know? Huh? Yeah.
um, yeah, I don't know, maybe. But
Yeah.
yeah, that's generally how I kind of like go about. But yeah, as far as best companies go, yeah, I don't know. Yeah, there's two things about a really good company. It's fundamentally is it really good, and stock returns. What spot they're in for. So
Yeah, what's the
yeah,
price? Yeah.
in general, like yeah, I don't really know. To be honest, like I could probably see Meta's doing a double. Like as we've been doing content creation more, I'm like trying to like become more of like a content creator user, and yeah, it's just making me realize more and more like wow, this is truly one of the greatest marketplaces ever for just like a bull market, and all businesses come to you for ad inventory. So yeah, it's one of those things that I think is really good. But yeah, that's kind of like where I sit with like thinking about future predictions and like future bets. It's like what strategies come up. I guess I do play a lot more reactively
Mhm.
than like I guess fundamentally based. That has paid off well in some instances and has not paid off well in other instances. But yeah, that's kind of like how I view going into 2026.
Got it. Cool. All right, man.
Yeah.
We've been doing this for an hour and 10, and I think it's a good place to wrap it up here. Um, I don't know. I think for both you and I, one, I think we're at least for me, I'm really, really excited about the podcast. I have fun doing it. I don't even care about the views, and it's just a good way to keep me in tune with the markets. And two, I don't know, deep in my gut, I think the podcast will do well, and I think our portfolios will do even better, hopefully. And
Oh,
yeah,
hopefully, please.
please,
Don't
please,
wrong us,
please.
Marcus. Jesus Christ.
Knock on wood, knock on wood.
Yeah.
But yeah, cool. Yeah, any closing thoughts?
Yeah, I mean, 2025 overall, pretty like testing year. There's ups and downs. Overall though, I think it was good. I think a lot of lessons learned, and going to 2026, yeah, I just feel more prepared. 2026 will be good. Lots of opportunity to experiment with in markets. especially with trying to find arbitrage opportunities. And yeah, I think yeah, I'm pretty excited about the pod too because like in general, I haven't really done content creation, and I think getting in front of the camera is like a step one high obstacle that like is like a thing everyone has, and it's like getting used to it is pretty good. So
Mhm.
yeah, and distribution is key. Everybody should have a distribution channel to some degree. Like
Yeah.
distribution plays a big role in all aspects of business. So anyway,
Right.
yeah, pretty excited.
Cool. All right. Well, thank you so much, everyone, for listening, and we will. Oh, wait. I forgot the
Yeah.
most important thing. Everyone, please like, leave a comment, and smash the subscribe button. I think this is like content creation 101 that we never say, but if you haven't, it would really help us out if you subscribe now. Um, we, I don't know.
Yeah,
I mean, fuck it. Do it
leave
or
in the
don't. Do it or
comments.
don't. We don't care. Yeah.
Yeah. Leave in the comments what you have in store for 2026. What you might be looking forward to. We'll take a look and respond. And yeah, smash that subscribe button or smash that like button, as Graham Stephan always says.
And subscribe and follow us on Twitter,
Oh,
so and
and knock
Instagram
on
and
that
Instagram.
and knock on that notification bell.
Yeah, please.
Yeah.
All right. Thank you so much, everyone.
Alrighty.
Bye-bye.